Chinese e-commerce giant Alibaba has picked the New York Stock Exchange over the once tech-heavy Nasdaq for its IPO. This is according to a person with knowledge of the matter. Alibaba's IPO could be the largest ever in the United States. The company is going to seek a listing under the ticker symbol BABA. Baba. So, when are we going to see Alibaba hit the trading floor? Joining me right now, Greg Harper, Harpervision Associate CEO and founder, Leigh Drogen, Estimize founder and CEO, and Leslie Picker, Bloomberg News IPO reporter, as well as Bloomberg West editor-at-large, Cory Johnson. All right, Cory, what does BABA stand for? And does it give us any hints?
Well, indeed, Ba is a word in Chinese. It means either fortune or the number 8. So it is thought to be lucky. The number 8 thought to be lucky for all things involving fortune, good fortune. So their hope apparently is to try to do a deal by August 8th. And so this
sounds like it to me. 8-8.
This refiling of an F1 document suggests that they're getting closer and closer. Okay,
why the NYSE? Do you think? Did this have anything to do, Leslie, with the debacle we shall call Facebook when it first came out?
It certainly does. I've been told by sources that they've taken this entire process extremely seriously and don't want any hiccups. This is a big deal, and any kind of execution risk they can avoid, they're going to avoid it. And even though the Nasdaq says they have fixed all the problems that caused the Facebook debacle, Alibaba doesn't want to take any chances.
Doesn't want to take any chances. Hey, they're going out on 8-8, it sounds like. They're not in the mood to take chances here. Leigh, what's this mean for the New York Stock Exchange? Big win.
It is definitely a big win. You know, there are a lot of secondary private holders here. Alibaba has, given stock out to a lot of people in the secondary market, and there are going to be a lot of people who want to sell on the open here, so they really have to get this right.
Okay, they got to get it right. Let's assume they do. Greg, what's the opportunity here? I mean, is this a company that people should be looking at pretty seriously?
Absolutely.
And pretty hard?
I mean, the whole economy is moving now toward China, and these guys are dominant. It's not just a website. It's also a PayPal-type company. It's got insurance.
Although they're not going to include that, by the way, in this offering. I mean, it does have that, but that's not part of this deal.
But regardless, it's mainly a huge entity over there, and the consumer growth in China is huge, and these guys are dominant.
Hey, look, it is a huge opportunity, but let's not forget it's still that much different from us. There have been a lot of questions regarding the board, a lot of questions swirling around this company in terms of its transparency. Cory, what is it that investors should be wary of?
Well, look, the numbers are really impressive. It's a very profitable company, throws off a lot of free cash flow. It's growing massively and has a lot of trends in its back, if you will. But I think that there are some concerns about the ultimate ability of U.S. investors to make changes at a company like this. While it doesn't have the sort of dual class structure that we've seen in a lot of technology offerings in the last couple of years, like Groupon and Facebook and others, it does have this variable interest entity that doesn't allow the shareholders to have direct ownership of the company. Rather, they own something in the Cayman Islands, that own something in Hong Kong, that own something in China. And so, when things are going great, no one has a problem with this. But when you have a company that might need a turnaround someday, we saw this with Yahoo, where shareholders were able to get involved. Dan Loeb was able to get involved, get seats on the board, make those kinds of changes. That would be really hard to happen with a company with this kind of setup, such as Alibaba has.
Another thing that's interesting, I know you're referring to their partnership structure there, Cory. One thing that's in the filing that hasn't been covered as closely is that these partners, these 27 people that have slightly outsized control over the voting power, they're able to allocate the bonuses. So they have control over deciding where the profit goes in terms of management.
And those partners are there, by the way, because in a typical situation, the shareholders would have the power to vote people in and out of a board. How is this different?
So the shareholders can still vote, but the partners nominate the majority of the board. So they get to choose their people, their close inner circle, for a majority of the board, which are then voted on by shareholders.
So it definitely makes it harder then for an activist, as Cory was saying, to be involved.
Absolutely.
What else do you think people need to be wary of? I mean, because, hey, the sales numbers really do look great. This is, imagine, a profitable tech, internet e-commerce company, which you don't hear of every day.
They look great, but if you look at the growth rates, when they filed the first S1, everybody was very surprised at how quickly they were growing. The second S1, though, the growth rate dipped to around 30% year over year. Yeah. People after the first S1 were saying that this was going to come out at about $150 billion, about 17 times sales, forward 12-month sales. Now, I don't know if it's going to get out at $150 billion because that growth rate has dipped significantly.
At the end of the day, I've seen estimates as high as $26 billion deal, though. So despite all of these risks that we talk about, there are fund managers out there who won't be able to miss this deal. It's too big that they'll have to get into it.
All right, let's take a look at another tech company that we've been following, one that made its debut today. We're talking about GoPro, the wearable camera company that came out with its initial public offering today. You got shares soaring. I know you just want to keep seeing these GoPro shots. Take a look there, up $7 and change, better than 31% at $31.60. So investors are excited about this. It's actually been billed not just as a camera company, but as a media company, which is also interesting. People saying that might help lend a little bit to its valuation. And you were kind enough to bring some of these right here on set.
I brought some. Yeah, this is the basic unit here. I've got to open it up here. But basically, the camera is this little tiny device here. And this camera, you can add accessories. This happens to be a viewfinder. You can stick in on it. And then it goes into these various mounts. This one is a mount that you can use if you want to do selfies. So you can open it up and shoot yourself with it. This one is for underwater. So you mount this on your head, and you go scuba diving with it, and you can take great pictures. And this is even a 3D version that you can stick on your car. So they only sell one version. There's only one camera. These are different flavors of them. But basically, it's the Hero 3. And the Hero 3 is their hardware. And hardware you don't make a lot of margin on. But they are selling, they're making margin on all this. This is plastic. They make a lot of money on that. They make all the accessories. And now, as you pointed out, they've got this software, this content at play where they can advertise. And everybody's onto this. And they're creating videos and people as advertising vehicle.
You know, Cory...
The margins are actually really strong in this business overall. I think that's one of the impressive things about this business is it's not only profitable, their gross margins are well over 30%. It's very Apple-like in that respect that the product is so beloved by its users that they're willing to pay for it.
Cory, I mean, couldn't someone else come up with a small camera like this?
I think that there are certainly competitors out there, but they are so focused on this sort of extreme sports world and making these things, bulletproof, almost literally, that they've got the product right and they've got followers of this brand. They've really created a strong brand identity. I can't tell you how many times I'll be, surfing or kite surfing or snowboarding, and everybody's got these
Everybody's
things
got
everywhere.
them. I mean, hey, we use them a lot. I mean, to their point about being a media company, I know, Leslie, we use them a lot in TV. I've used them in a race car. I've used them out boating. They really are pretty good at capturing that being right then and there, as you can see from a lot of this video.
So I go surfing and I have the bite clip, and I take it, you put it in your mouth, and you get first-hand shots. It's really amazing. And GoPro really is a social network that just happens to make cameras. And they've done the marketing of this so extremely well. It's interesting also in the comparisons to Apple because their product cycle is very similar to Apple in how people buy the product. They'll wait for the next camera to come out. And it was interesting, when they filed the S1, the current quarter growth rate dropped to about -8% because they were up against like 196 the year before.
Leslie, as Cory was saying,
yeah.
you get these profit margins that are pretty significant. And so I guess, and software now as well that they can pair along with this. So what are investors thinking is the real opportunity in terms of their ability to monetize all this?
So I talked to Nick Woodman today earlier, and I asked him what was the number...
Nick Woodman, of course, the CEO and creator and founder of GoPro.
And I asked him, I said, what was the #1 question you got from investors today, or over the course of the roadshow? What was the #1 thing they cared about? And he said the biggest question mark was how to monetize media, because that's what they were saying. That's what they said their strategy was going forward. They have this partnership with Microsoft to screen their crowdsourced footage. But how do you turn that into money? Do you plan to pay the customers who upload this footage? He said, yes, we do eventually plan to pay them. We plan to monetize. But
so they want to become a media company.
So they want to become a media company, but outside of these partnerships, they don't have any solidified plans to do that.
But they have a huge following. These people, the people are rabid about this. It's almost like you said Apple. It's almost like Apple. And this is the go-to. And yes, there are other competitors out there, but nothing has that same ecosystem around it. These guys really are dominating. I see cameras come and go. These guys are there all the time.
All right. Well, they're doing something right then. And investors certainly think so as we watch this stock continue to climb up 31.63%. Thank you, Leigh, Greg, and Leslie.